All right, based on this, we can easily take our entry from this area. How? Because we can see that this is our order block from the higher time frame. All right, let's say that was our order block on the 4 hours time frame. All right, that was our order block on the 4 hours time frame. First, I don't understand what you mean by risk or confirmation entries. I really don't understand that. If you can explain, please explain. All right, so basically, I can go to the lower time frame when I get this movement on the lower time frame. Remember, this is the higher time frame order block. All right, price has entered into it. Okay, and now from that order block, we have seen an impulse that have broken structure. All right, so that impulse that broke structure, we can easily analyze it, whether I want to use my Fibonacci for entries, all right, or whether I want to use my moving average stochastics confirmation, or whether I just want to use direct order blocks for entries, all right, whether I just want to use the order blocks for entries. So when you have this kind of breakdown sorted, all right, when you're able to work your breakdown, your market breakdown or your trade breakdown like this, it gives you greater confidence other than just taking entries based on what you are seeing on the higher time frame directly. All right. Why did I say that? Because on the lower time frame, there's a possibility that price gets here, all right, breaks that zone, comes back for a retest, and continues lower. Is this clear, please? Exactly, yes. When price gets to your order block, all right, you don't immediately enter because you're seeing it like that, all right? That price has gotten to your order block does not necessitate the fact that price must compulsorily react from that order block. Okay, so what you want to do is when price gets to that order block, all right, you want to wait for price to give a complete reaction, all right, to give a solid move that confirms to you that yes, we are ready for this movement right now. All right, Mr. Charles Emmanuel, do you get it now? Please let me know, Mr. Charles, if you understand it, if you understand what we're looking at. Leavings. The best time for entry is after you have seen the confirmation on the lower time frame. All right, after you have seen confirmation on the lower time frame. Let me quickly show you. Now, I have a simple approach that I use for this thing. All right, it's actually one of the simplest strategies you can find anywhere in the world. Quote me. Quote me on that. It's one of the simplest strategies you can find anywhere in the world. All right. However, the way I use this is a little bit different from the regular way that you find people use it. All right. So let's take a look at it. Right here, we can see that if price gets to the order block, all right, and it doesn't give a lower time frame confirmation, that's why I showed you that usually in the first session I showed you about Elliott wave. All right, usually every impulse on the higher time frame, it comprises of 5 waves on the lower time frame. All right, if it is actually going to be an impulse, it should have a wave count of 1 to 5. All right, that I showed you in the previous session. So no matter how that impulse is, because let me show you why I said so. So let's say this is your order block. All right. You're saying price got to it and just bounced off. If that is the case, it means that price has just created an imbalance here. All right. Price has just created an imbalance here that will necessarily need to be mitigated in order for price to continue high. Have I answered your question, Sam Dami? All right, good. Exactly, that's the point. So the new demand, all right, that was created from that imbalance can serve as your new entry. So let me quickly show you how I work with this very simple, very simple, mind-blowing strategy. First of all, I come to a very high time frame, like the daily time frame, all right? And I just basically see what the stochastics is looking like. You can see that the stochastics is bearish, all right, which means that the price is supposed to be bearish, all right? We're looking for sell entries, all right? And I can go to a time frame like the 1 hour. Let me go to the daily time frame and mark out where that stochastics, where the stochastics started its bearish movement. This was where it crossed, all right? So let's say from here. All right. Let's say from here, or maybe even here. So let's go to the 1 hour time frame. We're looking for sell entries. Remember I said that this is the simplest strategy you will find anywhere. All right. So the sell entry, the sell move has started, all right? And I am not yet in a hurry because I'm looking for a sell entry that will not give me too much headache. All right. So I want you to count how many entries I am going to get from this now. Using my moving average strategy, all right? That's entry 1, all right? This is entry 2 and entry 3, all right? And what do you see happen after each of those entries? From this first entry, for example, price moved about 150 pips, all right? From the second entry, let's check. Price moved 128 pips, all right? From the third entry, let's check. Price moved about 295 pips, all right? So based on all of this, all right, I would have gotten 3 very good entries, all right? 3 very amazing entries, all right, that I may not have been able to get on the daily time frame because I am waiting for price to maybe get to an order block or give a reaction or something like that. Okay? Even if you check, let's use 1 hour, for example. Let's use the 1 hour time frame, for example. This is the 1 hour time frame. Usually you want to look for an entry where price is coming down, all right, from the overbought region, all right? So let's look at it. You can see that the move started somewhere around here, all right? So, yeah. Let's go to the lower time frame. All right. Coming to the lower time frame, you can see that even though the sell already started, all right, even though the sell already started, you see that at this point, all right, at this exact point, we got our entry, our trade entry, all right? And from there, you can see that this was an easy, yeah, that was about 60 pips, all right? So when you see something like this, it gives you confidence to know that the direction you are trading, all right, is quite accurate. Like I said, this is one of the simplest strategies you will find anywhere, mark my word, anywhere. All right. This is another example. Let's see if we have any entry here. No entry. All right. No entry. Let's see if we have any entry here. All right. You see again that there was absolutely no other entry. All right. You see no entry. All right. So this is how I personally sometimes look at the market, all right, because it gives me a whole lot of peace of mind. I don't have to now start drawing 16 other blocks. You know, I don't have to start checking, oh, these are all the 25 breaks of structures. This is that. I don't necessarily do that all the time. All right, even though sometimes when I want to take some additional entries, I use other blocks. All right, for example, something like this. All right, that would have been a sniper entry with an order block. All right, from the other block. This would have also been a very good entry from the other block. Another fantastic entry from the other block. All right, but I don't use all of my energy. I don't expend all of my strength on trying to find all of this. All right, so how do I do it? I simply look at what is happening on the higher time frame, all right, and bring it down to the lower time frame to find a means for me to join what is happening, all right, to also be able to partake from the goodies that they are sharing, all right, the national cake that is being shared. All right, Mofes, I can see that you are asking about my moving averages. There is a reason why I'm not responding to that question, all right? Because like I said, my personal confirmations, my personal trade entries are secret, all right? I'm sorry about that. I know that it might come as a disappointment, but I'm really sorry. But basically, I'm just showing you so you have an idea, all right? So you have an idea of how this works, okay? So when it comes to top-down analysis, all right, or multi-timeframe analysis, one of the things that you want to make sure that you are doing consistently, all right, is that you want to be sure that you are not just looking at what is happening on the lower time frame alone. All right, it's important to also correlate with what is happening on the higher time frame. In fact, it's best to trade what is happening on the higher time frame, all right, to trade it on the lower time frame. All right, and that's why I gave you those 4 steps, all right, overall trend, key levels, lower time frame confirmation or breakdown, then entry confirmation. So let us look at the pairs that they suggested earlier, Euro USD. All right, this was I'm not sure I want to show this, but this was a setup that I dropped during my weekly market analysis. All right, I think the video should still be on YouTube. You know, this was one of the setups I dropped, Euro USD. All right, and that was on Sunday, last week Sunday, and you can see that overall that trade has done about 300 pips. All right, has done about 300 pips. How did I get this trade? All right, let's do a breakdown of that trade. So first thing first, I came to the I came to the monthly time frame. All right, and I identified the overall trend. You can see that from the overall trend, the direction is bearish. All right, that's the direction of the overall trend. However, stochastic seems to be oversold. All right. Let's look at another Euro USD chart, please. Okay, good. So this current, our current space, all right. All right, our current space is bearish, all right. However, I can see that there is a zone somewhere around here, all right. There's an order block somewhere over here. All right, remember this is the monthly time frame. All right, this is the monthly time frame, and there is room for a whole lot to happen. And I also checked for my pivot zones, all right, on my pivot levels. There's one here. There's also one here. I think another one here. All right, so having done that, the next thing I just want to do is I want to look for confirmations on the lower time frames. All right, so let's see what the lower time frame is looking like. So you see that very close to this line, all right, you can see that That was where price reacted from, exactly that spot, all right? But how can we be able to get into this trade from the lower time frames? All right, the answer is pretty simple. Let's go to the 15 minutes to make it clearer. So using the regular smart money concepts to break down this tree, all right, we'll be looking at break of structure here. All right, we resume the bullish. All right, break of structure, which means we've had a double break of structure, and that leaves only the option of price coming back to this other block. All right, to give us our entry. And what do you see? Right from this other block on the 15 minutes time frame, we have this strong bullish impulse. All right, very strong bullish momentum that brought us all the way to the top here. All right, the top of this zone. But as if that's not enough, okay, as if that's not enough, then we can now see that this movement, all right, this movement has also changed the trend completely. All right, from the higher time frame, we can see that we are now in a bullish trend. All right, this is an entry from the MA stochastics strategy, but that's not just it. Let's look at 30 minutes. Breaking this down on the 30 minutes, you can see that there is also this other block here. All right, how is that another block? The answer is simple. Can we see it clearly now? All right, if you're familiar with other block trading, how to trade other blocks, then you know that this was a really, really solid other block. Why? Because we already had all of this imbalance over here. All right, so this imbalance here just made this other block a lot stronger. All right, and then from that other block, if you are taking your buy entry from this other block right here, all right, maybe to this eye, here, that would have been 1:7, thereabouts. All right. Now, why am I showing you this? Remember that we are still inside the order block. We are still inside the overall order block from the monthly time frame that we checked on the daily time frame. All right. So what we are simply doing is we are looking for entry confirmations on each of the smaller time frames. All right. We're just looking for reasons to enter trades in the direction of the reversal, because what we're looking at is from the monthly time frame, stochastic is oversold. All right. It's already at this zone. So we have reason to believe that price should at least give us a bit of a retracement, all right, before we probably get the continuation of the bearish trend. All right. Do you guys understand this so far? Is this clear, please? If you have any question, please type it in the comment section so I can address your questions right away. I'm waiting. Please type your questions in the comment section or in the chat box. All right. You said you're lost. Now, are you familiar with anything related to other blocks or trend, break of structure and all the likes? Are you familiar with those concepts? All right, which means that you're most likely a beginner. All right, you're most likely just starting out. What I can say is this. All right, what I can say is this. Take your time. All right, don't try to absorb everything all at once. All right, take your time. Maybe perhaps you can reach out to me later on, and then I can see which resources I can recommend for you. All right, not necessarily one-on-one or whatever. I'll just look for videos that I can recommend for you to watch. All right, and they should assist you with having getting an understanding of this thing. First of all, let me say, Dr. Neil, congratulations on your POP. So you know that I know you. Must you have a change of structure on the lower time frame before going into the higher time frame point of view? I think the best advice I can give, all right. I think the best advice I can give is this, all right. And I want you to listen closely to me. When you set pending orders, all right, whenever you set pending orders on the higher time frame and you put your stop loss, what you are simply doing, all right, is that you are inviting the market makers, all right. You are inviting the market makers to come and eat your stop loss. All right, that's simply what you're doing. You are telling them, oh, I have money waiting here, because what they do is they grab liquidity from stop losses. All right. So one thing I tell all my students is avoid placing pending orders. All right. Instead of pending orders, you can use trading view alerts. All right. That, okay, when price gets to this point, alert me. All right. You can simply just come here, click on this. All right. Add alert. All right. You can simply just do that. And when price gets there, okay, you will get a notification that price has crossed that point. Okay, because if you set pending orders, there's every likelihood that you will get, sometimes you get some really, really nasty drawdown. All right, unless you set your pending orders few hours before, before price gets there. All right, not like you set your pending order like 4 hours, 6 hours before the move. All right, if you set your pending order like maybe 1 hour, 30 minutes, 1 hour, all right, you can still, you can still escape getting stopped out. All right. For those of you who are looking for a beginner's, a beginner's introduction to all of these concepts, all right, or maybe even for this video, I've dropped my contact, all right, just scroll through the messages, all right, and reach out to me. I'll send you resources you can go through, all right. So, having said that, all right, I want to give you guys a simple practice, all right. One simple practice that you can start following from tonight. Yes, of course, you can reach me on WhatsApp. I want to give you one simple practice that you can start following from tonight. All right. Many people don't know how to select the trade of the day. All right. Such that whenever they want to trade, they just look at all the commodities randomly and they just pick anyone. Or sometimes they even say, oh, I only trade Euro USD, I only trade GBP USD, which is not bad. All right. However, for me, there's a way I have been able to fix that. All right. At least last week Sunday, we had a market review where I was able to, I usually have market reviews every Sunday. All right. But last week Sunday, the market review that I had with my people, I was able to give them a setup or setups that I've done over 700 pips so far this week. All right. Over 700 pips. How did I catch such trades? The answer is simple. One thing you want to be able to do is look for trades that are already close to exhaustion. All right, moves that are already close to exhaustion. How do you do that? One way to do that is you can come to the daily time frame. All right. This is MA, I think it's MA. Yes, this is moving average 100. All right. You can come to the 4 hours time frame and check areas, all right? Check for times where price is close to that moving average. All right, very close to this moving average. And you can start to look for, okay, price has gotten to the moving average. Stochastics is oversold, they're overbought, all right? So that increases the chances of price going down. All right, price is at the moving average, stochastics is overbought, all right? We are looking at possible sell entries, all right? Price has broken structure, retested the moving average, all right, from the top. Stochastics is oversold. We are looking for buy entries, all right? And like that, like that, like that. So such that when you catch trades, all right, when you settle down and take trades, your trades are usually going to be high probability ones. This is an example of what I just explained on the daily time frame. All right. Stochastics is overbought. Price is already at the moving average 100. All right. And what happened next? You can see the massive drop that price made. All right. Here too, we can see price was at the moving average 100. All right. Stochastics was oversold. All right. And then we had this massive uptrend. All right. Such that you will no longer be struggling to do analysis, and you are still there for 5 hours, 6 hours. You are still looking for which commodities to trade. All right. It's usually very stressful. All right. So having said that, one simple assignment I'm going to give you is this. Place a moving average 100. All right. Simple moving average. Place it on your chart. All right. And go and check. Go back and check. All right. At the point where price has touched the 100 moving average. All right. For example, here now, we can see price broke the moving average before, came back to retest it. Stochastics was oversold. There was another block, and we had this buy entry. All right. I've already dropped my contact, Emmanuel. I've already dropped my contact. So you will go and check all of the situations where that has happened in the past. All right. On whatever time frame. And check the consistency. All right, go and check the consistency of how price usually reacts when something like that happens. All right, go and check how price usually reacts when price gets, when it gets to such areas. All right, so this is how you want to be able to do your stuff. Okay, so practice it. All right, just moving average 100. Let's do that for starters. All right. For starters, let's practice with this first. Check how price reacts every time it takes into the trend. All right, check it. All right, check it. And you will realize that this is so simple, even a baby can do it. All right, it is that simple. All right, so that's just the cheat code that I want to give you guys for today. All right, that's the cheat code I want to give you guys for today. All right, so quickly, how has this session been? Have you learned something new right now? All right, have you learned something new? Please let me know in the comment section if you've learned something new. I would really love to see that. Have you learned something new tonight? Please let me know. Please let me know. Please let me know. All right, beautiful, beautiful, beautiful. All right, so we'll have another session very soon. All right, so just keep your notification on. The doctor is going to announce whenever next I have a session. All right, so don't worry if you got lost. Get my number